For more on this, we want to bring in Mark Weinberger. He is the former CEO and chairman of EY. During his tenure, EY had about 300,000 employees in 150 countries. He also continues to sit on a number of corporate boards, including Johnson & Johnson. And Mark, I know that you've been talking to plenty of these CEOs. I know you see things not only from the public boards that you sit on, but also the private boards. What do you think's happening in the economy right now?
Becky, well, first of all, good to see you this way. I wish I got to see you at the BRT conference. I saw Andrew briefly. I'd say, Becky, what you're seeing is the business is taking their foot off the gas. I wouldn't say they're slamming on the brakes. We are seeing them prepare for the hurricane, as Jamie described it, he just had on, that's coming, and batten down the hatches today. Certainly, we're not seeing massive firings outside of technology in some companies, but we're seeing a lot of hiring placed on hold and freezes, and we're also seeing cutbacks in the investments in various items and the extension of payment terms. So especially smaller businesses, Becky, that don't have the brand and can't raise prices along with the inflation are starting to really question some of the investments they've been making over the last couple of years.
Yeah, we've heard from some of the small business organizations that when it comes to small business, they're still having a tougher time finding employees. And I guess that's because of the competition they see from some of the big businesses that do have a little more leeway when it comes to things like raising prices. But Jamie Dimon was also making the point that this really depends on where you are in the economy, what business you're in. If you talk to somebody like the airlines, they're still selling tickets, no problem. Hotels are still booking places. Theme parks are still seeing lots of activity. It's more of the services sectors that are really seeing a boom when it comes to maybe the goods and manufacturing that are having a little bit more trouble with it if you're selling consumer goods.
Well, that's right, Becky. And the other issue is not just even what part of the economy you're in, but what are your finances? If you're well financed and you can go and dip into your cash and you've been over this period of time of growth and, keeping that on hand, then you're able to go to market with relatively low cost. If you're a company that has to raise money, especially private companies, remember, the Wilshire 5000 is now down to about 3,500 companies. So more and more companies are private. They haven't reevaluated yet. They haven't gone back to the market yet. When they will, they're going to find their asset prices are less. The cost, the speed at which we're raising interest rates is unprecedented. Not the overall level, but the speed at which we've been doing it. Those costs of new debt to go ahead and purchase items, to go ahead and pay their employees is going to be much higher. That's not figured into all their plans from a couple of years ago. They're going to have to change their assumptions, and that's going to hurt businesses like that quite a bit.
So what do you think happens? We've got a couple of things coming next week. We're going to get producer prices today. We'll get another inflation read next week, and you've got the Fed next week, too. That's what people are waiting to hear. Do they need to raise rates again significantly? Does 50 do it? Do they have to keep rates higher for longer? And what will that ultimately mean for the economy?
It's a good question, and I can't time next quarter or next year, Becky. I'm not sure anyone could. But if you look at the systemic changes, the wage inflation we've seen is sticky. So that's going to be around. The supply chains, the cost of moving onshoring, nearshoring, making supply chains more resilient and less efficient is up. The energy prices, it's going to go up and down over the short term, but we still have that mismatch between supply and demand. And as China reopens, energy prices are going to spike again. So I think costs are going to stay high. The economy is definitely slowing. You heard from Jamie and others last week on your show about the consumers whose accounts are starting to dwindle and will, by the middle of next year, be back down to pre-pandemic amounts, and they're going to have to start borrowing again. 70% of the growth in the economy is consumption. So what I see is slower growth. Costs are going to remain high for business. Margins are going to shrink. And whether we have a deep or small recession, certainly I would think the betting would be on a slowdown and some sort of recession next year.